Hi Silver Bulls and welcome to a brief silver update here on Commodity TV. Yeah, we at Commodity TV are also currently amazed and have an ever-widening grin on our faces. The price of silver not only reached the magic mark of $100 per troy ounce, but also surpassed it relatively effortlessly, peaking at over $115. $15 per ounce. That rings a bell, doesn't it? Yes, that's right. For years, the price of silver was kept at around this level by paper contracts. And now there's suddenly a 1 in front of it. Those who won't listen will have to feel the consequences. I say with a wink in the direction of certain institutions. But let's get to the facts, or rather the most important questions that now arise. Question number 1. Why is silver currently exploding? There are several reasons, of course. In times of crisis, investors often flee to safe assets such as precious metals. Silver traditionally benefits from this, often even more than gold, because its smaller market reacts more strongly to demand. Silver has experienced increased demand from private investors and speculative buyers as a result of the recent rally. Purchasing interest has risen sharply, particularly in China and among ETFs. Above all, however, silver is an industrial metal and demand for it has also risen sharply recently, especially in the solar and photovoltaic sectors, electronics and semiconductors, as well as electric vehicles and data centers. And this technical demand is growing faster than supply worldwide. Silver is now in its 7th consecutive year of supply deficit, meaning that demand far exceeds supply. This is referred to as a structural supply deficit. The physical amount of silver on the major trading platforms is low, while many buyers are hoarding it or industrializing it. This leads to supply bottlenecks, which drive the price up further. In addition, paper contracts are extremely important for silver, and to date, around 95% of them have been settled in cash rather than through physical delivery. Over 95% of daily silver trading is or was therefore paper. Until now, it has been correspondingly easy to keep the price of silver low. Now, however, confidence in the paper system has been shaken, and investors increasingly want physical delivery instead of cash settlement. The result? Inventories are insufficient and premiums on physical silver are rising. And that, of course, is the nightmare scenario for paper markets. Institutions such as the Fed can print money, or let's call it creating money out of thin air, without any problems. But no one has yet invented a process for conjuring such a silver panda out of thin air. And now we are slowly but surely approaching a short squeeze. Institutions, I won't name names, you can look them up yourself online, are continuing to try to capture the price of silver using paper contracts. But paper contracts are now like gasoline on a fire. Question number 2. How can you tell that a short squeeze is slowly approaching? It's actually quite simple. Just look at the price differences between the individual silver trading centers. The COMEX price is currently around $115 per ounce. In Shanghai, it's around $131 per ounce. How can that be? It's quite simple. In Shanghai, many transactions are physically settled, unlike in Western markets such as COMEX, where a large part of trading is still paper-based. We just discussed this topic. As a result, Shanghai prices often reflect the actual supply-demand ratio more closely, which can reinforce corresponding premiums. Such a price premium can, of course, fluctuate depending on daily rate, but the current level is significantly above the normal spread. The fact is that the availability of physical silver in China is currently tight, which means there are relatively few physical stocks on site that are easily deliverable. Incidentally, at the beginning of the year, China introduced a system whereby only certain state-approved companies are allowed to export silver. This prompted a response from Tesla CEO Musk, among others, who was naturally not at all enthusiastic about it. Tesla will no longer receive silver? Let's see if this headline reappears somewhere. Question number 3, and the most important question. Where do we actually stand now? Well, the silver price chart is slowly taking on parabolic proportions. Nominally, we are clearly at an all-time high. But if you look at the inflation-adjusted silver price chart, you see that we're only about halfway to the silver price high of 1980. Adjusted for inflation, the price of silver in January 1980 was around 180 to 200 US dollars per ounce. In terms of chart analysis, several momentum indicators show overbought but still bullish trends. The majority of technical indicators are currently showing buy or upward signals. A further rise in the silver price towards 150 US dollars appears entirely possible as long as the price remains above important average lines. Resistance is evident at the current level between 115 and 130 US dollars, with support in the region of around 95 US dollars. Finally, I would like to emphasize once again that this is not a recommendation in any direction. We are merely presenting the current facts in a concise manner. Please do your own research before trading. A good tip that I personally learned from an old commodities veteran when I was young: taking partial profits at least won't make you any poorer. Otherwise, thank you for your attention. I hope you have gained some new insights into the silver market and that the connections are now easier to understand. Further information on silver as well as gold, battery metals and uranium can be found in the latest Swiss Resource Capital reports, which you can download free at rohstoff-reports.com. I wish you a continued success and send you warm silver greetings from Switzerland.